Finance. For finance, it's interest, banking, and inflation. First, we're going to look at the difference between interest and the interest rate. So interest is the amount of money that you charged by the lender of money, for example, the bank, for borrowing an amount of money over a period of time. The interest rate is the percentage charged for the borrowing or loan of a sum of money over a given period of time. So to just show you what the difference between the interest rate and the interest, let's say you borrow 1,000 Rand and you are charged 10% per year, simple interest. The interest rate is 10% per year. And then the interest is going to be 100 Rand, which is 10% of 1,000 Rand. That is the difference between interest and the interest rate. The rate is the percentage, it's expressed as a percentage, and then the actual interest is going to be an amount that you calculate. Then we're going to discuss inflation versus deflation. I'm sure you've heard about inflation. You may not have heard about deflation. Inflation refers to the increase of the prices of goods and or services over time. Deflation refers to the decrease in prices over time. Deflation doesn't happen as often as inflation. The inflation rate is like the interest rate. Inflation rate refers to the rate of price increase. It is expressed as a percentage. Another thing that you need to know about inflation is that the quoted inflation rate always represents the increase in the price of an item, either from a month in 1 year to the same month in the next year. So that's year-on-year inflation, or from a date in 1 month to the same date in the next month, month-on-month inflation. And sometimes it's from, they will compare a quarter to another quarter. Maybe if you listen to the news, you'll hear them say, okay, this in the last quarter, the inflation rate was this quarter it's this, it's gone up or gone down. So inflation reduces the buying power of the consumers. Prices are higher, so consumers are not able to buy as much as they used to. That's why when people get a raise at work, they always consider the inflation, because most of the raise that you receive is actually inflation adjustment. Because if you don't get a raise and there is inflation, it means you are getting paid less than you were paid the previous year, since the buying power of your salary has decreased. When it comes to interest and banking, loans and investments, I'm going to just go through a few definitions that you need to know. Bond or mortgage. When we speak about a bond and a mortgage, it's the same thing. It's a certificate promising to repay borrowed money at a fixed rate of interest over a specified time. For example, the mortgage that we got to buy this house, our house, it's a promise to pay it off over 20 years. Benchmark, a standard against which things may be compared. For when it comes to the inflation, I think what they sometimes do is they'll choose a day. They'll choose a day, 1 year, and then they'll compare prices to that day, year to year. So that date is the benchmark against which prices are compared. Period is a portion of time. Model, to represent or imitate. Fluctuate is the rise and fall regularly in number or amount. So, for example, interest rates fluctuate because they go up and down, and we never know when. So the interest rate now is not the same as it was probably this time last year. A fund, to retire is to leave one's job and cease to work, stop working. A fund is a sum of money saved or made available for a particular purpose. Stokvel, it's a saving or investment society. to which members regularly contribute an agreed amount and from which they receive a lump sum payment. Pool, it's not like a swimming pool, it's to pool, accumulate or put together. So you pool, for example, a stokvel. In a stokvel, members pool together their funds. Members are people that have joined the group, like a Toastmasters, like stokvel. Premium, an amount to be paid for a contract or insurance. So there's an insurance premium, the premium that you pay to the medical aid, that's a premium. For funeral cover, that's a premium. For life cover, that's a premium. So policyholder, a person or group in whose name an insurance policy is held. A marker is an object used to indicate a position or time. Now we are going to do some worked examples. I'm going to do some examples. I'm going to get questions from your book, from the, what's the name of this book? From Via African Mathematical Literacy, grade 12 learners book. And then we are just going to do some examples. Here's the first question. This is from the inflation part. It says, determine the impact of inflation through calculation. Example, a loaf of bread is currently, so a loaf of bread now currently costs 8 Rand 85. If the bread inflation is 8%, so the bread inflation is 8%, the new what is the new price going to be? So what you're going to do to calculate that is you are going to get the new price is equal to old price plus the 8% inflation. 8% inflation. I will show you the long way, and then I'll show you the easier way when you understand how this works. So this is how they do it. They say, which is equal to, it's 8 Rand 85, right? 8 Rand 85 plus, right? Yes, plus 8% of also means times. So of is the same as times of 885, right? Which is equal to, you see, this is the long way, which is equal to 885 plus, because when you go, let me use my calculator. Is there a calculator here? 8.85 multiplied by 8%, which is equal to 708. What is it? Yeah, and 0.708, which is equal to plus 8.85, which is equal to 9 Rand 56 cents. The easier way is, let me show you the easier way. So this is 100%, right? So 8.85 is 100%. When we add the 8%, it's going to be 108%. I hope you understand that. So there are two ways that you can do it. You can say 8.85 times, is this way, not, or times 108, because we want it to be 108% divided by 100, which is, look at this, 8 No, 8.85. It's not 8.88. It's 8.85. So you go 8.85 times 108 divided by 100, which is equal to 9.56 Rand. You see, which is equal to 9.56 Rand. Another way, which is even shorter, I think, is just saying 8.85 times 1.08. 1 is 100, and then this is 8%. Remember, 8% is 0.8. It's not 0.8, it's 0.08. 0.8 is 80%. So maybe that's 9.58 Rand. So you can go 8.85 Rand times 1, which is the 100.008. Because we want to add 8% to this 8.85, which is going to be 9.56 Rand. So when you understand this, then you'll be able to understand this and this. I prefer doing it this way because, let's see, 108 divided by 100 is equal to 1.08. So if you know that 108 divided by 100 is 1.08, you can just go straight to multiplying 8.85 by 1.08. Otherwise, we can say 8.805 times 108 because we are adding 8% to this. Instead of doing all of this, it's going to be faster. Okay, let's go to, if you don't understand this, please let me know and then I'll go over it again. The second example is a box of washing powder increases in price from 23.99 Rand to 26 Rand. Okay, let's say washing powder in pieces from, so where is it, 23.99 to I think it was 26.80 Rand. This is an increase. Okay, so we want to determine here the interest rate. So we want to figure out what the percentage is. So when they say calculate the inflation rate, it's the difference between the previous price and the new price, but expressed as a percentage of the old price. Remember that you calculate the difference and then you calculate it as a percentage of the old price, not the new price. So firstly, you calculate the difference, and the difference is when you speak about the difference, it's subtracting. So you go 26.80 Rand minus 23.99 Rand, right? You get this answer first, right? So you get that answer first, and then you divide it. This is divided by the old price, because we are comparing it to the old price, 23.99 Rand. So the difference, let's calculate the difference. Where's the calculator now? It's disappeared. So it's hard. Where's the calculator? Here. So we first calculate the difference. You move. It's 26.80 Rand minus 23.99 Rand. We get the answer, and then we divide it by the old price, because when with interest, we always comparing it with the other price, which is equal to, and then if you want to make it into a percentage, you can not like that. It's 26 Rand 80 minus 23 Rand 99 divided by, you must say equals first, divided by 23 Rand 99, which is 11 point, we'll see it's 12%. So, but to make it into a percent, multiplied by 100, which is 11.7%. Remember, percentage is like you are making everything over 100, so don't forget to multiply it by 100. So let's write how to calculate the inflation rate. You say inflation rate is equal to the price increase. So price increase is the difference between the new price and the old price. You divide it by the original price, and to make it into a percentage, obviously you multiply it by 100 because the percentage is always over 100. I hope you understand that. I think if you just need to understand how to do all these manipulations. I'm going to stop it there. And then for the next video, we are going to look at a home loan, a worked example about regarding a home loan. A home loan is a bond or mortgage loan. Thank you for watching. I hope these are really helping you. Please go through them. And if you don't understand anything, let me know. And then I am going to try and explain that part.